What's going on, guys, and welcome back to another video. So today I want to discuss a few things mainly driven around my overall portfolio. I want to discuss some stocks I bought today, how much I deposited into my account, and I also want to have a brief discussion on the current market volatility. So as I'm sure you're aware, if you've seen any of my prior videos, that my main 30 stock portfolio, which we look at in a few seconds, is mainly based around dollar cost averaging of blue chip stocks in all different sectors. So it's a well diversified blue chip portfolio. So kind of times like this, when market volatility and a lot of the markets tanking as well, poses great opportunities to invest. So today I put a further €500 into my Trading212 portfolio, which we look at again as I said in a sec, and I bought 5 companies that were currently in the red in my portfolio to help improve my dollar cost average. So one of the main benefits of being a long-term investor is you don't really get caught up too much in the hype. But again, it kind of does pose a lot of opportunities if you're in it for the long term and you see some of your blue chip companies have dropped in value. It only kind of means one thing, and that's more profit in the end of the day if you can get in at a cheaper price. So even though the markets have been dipping, there's been some other strange news as well, such as GameStop coming back for round 2. So it's going to be interesting to see, because we can see last night in the article here that it's quadrupled in value last night. So it's going to be very interesting to see if it's going to have another crazy uptrend just like a few weeks ago. But what I mainly want to focus on in today's video is my overall portfolio and my plan of action going forward. So as I said at the start of this video, I deposited a further €500 into my account, which now gives us an overall account value of just under €7,400, or 7.4% towards my overall goal of having €100,000 invested into the market. So today we're going to look through how each of my overall portfolio pies are doing. We can see on screen here that we're currently up 9.7%, or €632 at the moment. Again, the markets have been going down a fair bit over the last few days, so I do feel that if I can get in at a lot cheaper prices within some of my stocks, that in the coming weeks it's going to have a substantial difference in terms of my overall profit, and it's only going to be of added benefit going forward. So what we'll do now is we're going to have a look through each of my portfolio sector pies to see how each is performing, and whilst going through these we'll see what companies I further invested into. So one of the main reasons why I only put 250 of this 500 in today is because as a long-term investor you don't need to throw all your money in at once, and sometimes having a cash reserve sitting on the sideline is certainly of great added benefit. So I'll see over the next few days how the stocks respond. Firstly, the 5 that I invested into earlier today, and if they go down further in value, then well and good, I'll just buy more at those prices. Again, it will give me a better dollar cost average. Even if they go up in value, well and good as well, I'll just focus on different stocks then. So that's kind of one of the main benefits of having 30 companies across all different sectors, because there's always going to pose opportunities to dollar cost average. So we're going to have a very brief look through some of my sector pies now to see what companies I bought into and how they're performing. So my communication services pie, we have 21% in profit. We have €578 overall. And these 2 companies here, Walt Disney is up nearly 50%. And Facebook, when I bought in earlier, this was in the green. But at the moment it's down about 1.5%. So that even might be one of the companies I might further dollar cost average in, maybe at the start of next week, depending if it recovers or if it goes further down in value. We then have my consumer discretionary pie. We have 3 companies here, and Tesla here is down 10.5%. This is one of the companies today I invested 1/5 of the money, or €50. So hopefully down the line again, this will help improve my overall average cost, effectively giving me a better profit. McDonald's and Nike are also now in the red, but they're not kind of down enough, in my opinion, at the moment to further invest into. So if they go down further in value, well and good, I'll buy more. But at the moment, this consumer discretionary pie is down 2.75%, and we just have just under 1,000 invested. Consumer staples as well, we have €1,000 invested and are down 1.3%. Coca-Cola is up 1.75%. PepsiCo is another company we bought into today, €50. It's currently down 3.3%. This was down about 5% earlier, but thankfully, due to that €50, it's after coming back kind of closer to the green. P&G, we also put a further €50 in here as well, and it's still down 5% at the moment. So just like the other companies, we'll monitor them going forward. In my energy sector pie, we are up 19.5%, and the 2 companies here, the old school style energy stocks, ExxonMobil and Chevron, are up 60% and 39% respectively. And iShares Global Clean Energy ETF, a lot of people have been selling this lately, but I feel that at current prices it's worth buying further into, and I deposited a further €50 here. Obviously it's down 10% at the moment, but it was down close to the 15% before investing further. If we go down further here, my two main ETFs are all in the green, up 13% overall. Vanguard SP 500 is up 13%, and the Vanguard FTSE 100 is up nearly 12%. We then have my financial sector pie. We have €1,100 invested here and are up 27%. We have Visa and MasterCard up 6.9% and 8.8% respectively. And we then have JP Morgan and Chase, Bank of America and Goldman Sachs here, all up between 46 to 62%. Healthcare sector pie, we also put a further €50 in here in the form of Pfizer. They're still down 7%, but earlier they were down about 10 or so. AbbVie is up 22% and Johnson & Johnson is up 9.4%. Industrials, we didn't do anything here today, but it's up 7% overall. We have 3M and Caterpillar in the green. Caterpillar is up an impressive 40% and 3M is up 6.6%, with waste management is down just 1%. We have nothing in materials. In real estate, we just have the one company as always, Realty Income. Tech is still my largest holding with €1,270 invested. If we scroll down here, we can see 4 of the 5 are in the green in the form of Microsoft, Apple, Alphabet Class A and IBM, with Amazon being the exception, down 1.6%. And just like Facebook earlier, if this company drops further in value over the next few days, I'm going to snap up the deal and buy even more. And finally, we have nothing in my utility sector pie. So on screen now, we can see the 5 or 6 companies overall here, or even 7, that were in the red at the start of the morning when I invested. So we invested further into 5 of these, as I said. We can see the 5 highlighted on screen here with €50 invested into each. And the 2 left out was McDonald's and Waste Management. However, as the day went on, the markets went down a bit more. So we could even add the legs of Amazon and Facebook and even a few more into this chart as well. So that's why one of the main reasons why I didn't invest the other €250 today, because I want to see how the market pans out over the next few days. And again, as a long-term investor, you kind of need to realize that you can't have FOMO either, or fear of missing out. You need to have a kind of patient approach, and timing is even still important as a long-term investor. Because, for example, let's say I put all €500 in today. Well, even if, just say, these companies were the only ones in the red at the time, if I put the 500 in, and then it came to light that, let's say, Amazon and Facebook went into the red as well, well, we wouldn't have any further capital to invest. So effectively, we're actually losing out. So in my opinion, you're much better off kind of always having a cash reserve on the sideline. And even when I invest at €250 over the next few days, I'll probably put a further €200 to €300 back in as a further cash reserve. So I've seen as well a lot of people in the comment section in a lot of YouTube videos are panic selling, but I really don't see the reason why. In all honesty, if you have kind of blue chip companies, fair enough if there's some of the more penny stock or speculative companies. But if you have well diversified blue chip companies, the markets always have to go down as well as up as well. So you can, obviously, it's great when they're going up in value, but if it just kept going up, it's unrealistic and it actually isn't good for the overall market either. So you always need pullbacks. And in times like this, it kind of does make the bigger difference in the long term if you kind of keep a cool head, keep your stocks, and remember you only lose money if you sell. And also, dollar cost averaging is key in my opinion as a long-term investor. Another reason why I think a lot of the blue chip companies, especially companies like Tesla, etc., are going down in value is mainly because of the GameStop saga, and also for a lot of the penny stocks that people are buying a lot lately and they're becoming very popular. So obviously, if you had a lot of money in companies such as Tesla and you took this money out, well then the supply and demand, so the supply is going up and the demand is going down, effectively dropping the price overall. And that's just the same across the board in a lot of these more kind of safe stocks, as a lot of people lately, especially the younger generation, are starting to invest in more kind of high risk, high reward style stocks. So it was kind of no surprise that the overall normal market would suffer as a consequence. But again, that's all got to do with the market as well. So eventually people will start putting the money back into the more safe options if their penny stocks don't work out. Or for example, in terms of GameStop saga, if that doesn't go their way, a lot of the time people will put their money back into the more well diversified blue chip stocks, effectively driving their demand up. So their supply will go down, effectively driving up the overall share price. So that's pretty much it for today's video, guys. I just wanted to give you a brief update on what I was doing in terms of the current market conditions. We deposited a further €500 into my portfolio, bringing us up to about €7,400 at the moment. We deposited or invested 250 of this at the moment into 5 companies, which we went through, and my reasoning behind it. This kind of effect or this benefit won't come into effect for a few days, in my opinion, until the market start to settle down. And if prices start to go back up, we'll see my profits increasing because we got in at a cheaper price. If you've found this video anyway helpful or entertaining, it'd be much appreciated as always. If you're new around here, consider subscribing to the channel. And as always as well, it'd be much appreciated if you could like the video. Most importantly, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. I'd also be very interested to see your approach in terms of what you're doing with your own portfolio in this current situation. Again, I wouldn't really call it a crisis, it's only a few day blip, but I'd be very interested to see, are you buying more of your stocks? Are you holding money in cash reserve? Are you selling your stocks? It'd be interesting to see what you're actually doing and your approach and reasoning behind it. Thanks very much guys, I hope you enjoyed this video and I will see y'all in tomorrow's video.